There we go. Welcome, everyone. Place your first trade. Of course, disclaimer there. Be mindful you are taking risks. You are taking trades inside your own account. Our mission is to enrich lives. That's what we're here for. Here to help you enrich your life, enrich your bank account so that you can make a difference in the world. Let me tell you a couple quick things about me. If you're noticing why I have no hair, it is because I lost a bet and I had to shave my head about a month ago. It's growing back a little bit. So this is the new and improved Matt. Oh my goodness. The recordings will be provided to you after this, no extra charge. So just chill out, have a good time, and take some notes. Yep, great question. I am a 20-year plus entrepreneur and investor. I've been taking risks pretty much my whole life, ever since I was 18. And I'm a few years older now, of course. I have been trading stocks, and I was originally a customer of Real Life Trading as a trader in 2016. So I've been at this a few years, and I love working with startup companies. I love technology. I am working on a book, and I have two daughters, they're 18 and 19, and we just moved my youngest out. She moved to Florida. And so we're now officially empty nesters. And what do you do as empty nester? You go to Disney World, which is what my wife and I just did, just got back about an hour ago, and had a great time. Of course, you go to Disney World without your kids. That's the point, right? And then also, finally, I am a world-changing force for good. I believe that money doesn't necessarily change you, but it reveals who you are. So if you treat people, terribly, and you have money, you're going to be a 10x version of that when you get lots of money, right? If you are a very kind, tender-hearted person, and you get a bunch of money, then you're going to be a 10x version of that person as well. So let's talk about what we're going to talk about real quick. Number one, how to open a brokerage account. How to open a brokerage account. Then we're going to talk about building a written plan and strategy, which I'm going to do all the work for you. And then we're going to talk about how to place and practice trades, how to go back in time and practice trades. And then we're going to talk about how to set up alerts. So an alert is something that's going to pop up on your screen that says, hey, buy this stock. You're not going to just buy it whenever you want. And then finally, we're going to talk about how to enter orders. Make sense? Okay, let's dive in. So the first thing we need to do is open a trading account. Now, I'm not going to go through each one of these in depth, but needless to say, if you want to place trades, you need a brokerage account. These here are the top three. Robinhood and TD Ameritrade, your top two here, are very, very popular for customers in the US. Questrade is very popular for folks residing in Canada. So here's the basic steps of opening a brokerage account. You open the account, typically there's nothing in it, it's just an empty account. You go online, you fill out an application. You say, I want to open a brokerage account. You fill out your information, your tax information, all that good stuff. And then it pretty much takes maybe 10, 20 minutes, pretty quick. And then next thing you're going to do is you're going to verify and connect your bank account. Now, this is very important because when you make money, when you take trades and profit, you want to be able to take some of that money out to give, to spend, to reward yourself, right? To make a difference in your community. And so when you connect a bank account, that's how you're going to move money in and out of your account. And then finally, once you set up a bank account, the third step is to transfer funds. So in our case, typically most of these brokerage accounts will put 2 or 3 small, tiny transactions, maybe 12 cents and 22 cents, and they'll want you to verify the amount to make sure that you actually have access to this account, right? You don't want to be taking money. They do not want you to be taking money out of an account in order to, to move money from someone else's account into their account. So after you set up your account and you connect the bank account, then you're going to just let the funds settle, and you are you're going to let that money. So you're going to transfer some money in. Maybe it's $1,000, maybe it's $5,000, any more, any less, whatever makes sense to you and your lifestyle. And then you're going to allow that money to settle, and then you're going to be able to take trades. First, here is what Robinhood looks like. This is a Robinhood account. And what you'll notice is up here in the top right on all these websites, boom, sign up. That's where you start. If you're interested in setting up a Robinhood account, there's where you start. This is the TD Ameritrade website. Boom, top right, same thing, open up a new account. Pretty simple. Each one of these has maybe 10 to 15, 20 steps that you go through, enter your address, information, all of that. For the sake of time, we're not going to go through that in this class, but I assume you guys all know how to enter that information on your own. And then finally, the third one we recommend is Questrade. Again, pretty much top right button, take action, open an account. Now, the question that I get most asked as a trader, the thing that we say the most at Real Life Trading, if you've been around us any more than just a few weeks, we always say that your job as a trader is to blank. Your job as a trader is to what? It is to execute your plan. Execute your plan. Now, here's the biggest problem I see when I start working with new personal coaching students is they have no plan. How are you going to execute on the plan if you got no plan? It's like a slight problem, right? So imagine going on like a road trip. You have no plan, no money, and then you're shocked that you're lost and broke. It's like, that's predictable, right? You can see that problem in advance. So again, execute your plan. That is your job. Now, if I was to tell you that everything you do is based on your plan, what to buy, when to buy, how many shares to buy, all that should be wrapped up and encapsulated into your trading plan, not just up in your head, but I'm actually going to show you a written plan. And so that prevents you from doing dumb things. That prevents you from making dumb trades just because your friend on Twitter is talking about some cool hot stock, some penny stock, right? It prevents you. And so your plan, your written plan, which we'll go through in just a second, that acts like a toll booth between you and your account. It acts as a toll booth. It's like, hey, we must check in. Does this trade I'm about to place match my plan? Yes or no? If yes, continue. If no, stop, brakes, no more. Okay. So the number one thing I get asked as a trading coach all the time, I was asked as many times in the past month, is this: what stock should I buy? Right? Have any of you guys ever asked that question? What stock should I buy? Well, a better question would be, what strategy should I use? Right? So of course, there's lots of stocks to buy. There's thousands and thousands of them just on the US markets alone. What strategy should I use? That will help determine what you should and shouldn't be buying, and when you should buy, and how many shares to buy. Does that make sense? So I want to show you a little secret. Type a 1 in the chat pane if you want me to show you a strategy that has a 100% win rate. Type a 1 in the chat pane. There's a lot of ones. Okay, you ready? It doesn't exist. Stop searching for it. Stop wasting time. So it does not exist. There's no strategy that wins all the time. You'll never. Otherwise, what you could do is what? Yeah, that was a trick. Sorry, that's what I mean. Otherwise, whoever has a winning strategy that never loses, you'll be a billionaire tomorrow. Literally, you'll beg, borrow, and steal not steal, but you'll beg and borrow and get every penny you can and throw it in there. And boom, you're a billionaire tomorrow, right? Because it never loses. That it doesn't exist. So my point here is, stop spending time looking for the perfect strategy and just find a strategy, which we'll go through here in just a second. And I'm going to teach you a strategy that, quote unquote, follows the trend. Have you guys heard of trend following before? But imagine if you set up an alert in your stock account and you only take action, you only buy and sell when you get an alert on your phone. And when I say alert on your phone, it could be on your desktop computer, it could be on your laptop, it could even be an alert on your iPhone, your Android, You get a notification that you set up. You're not paying for some third party to tell you what trades to take, because that, let's face it, that hardly ever works, right? By the time you get the notification, by the time you get your order in, the stock's already moved, dollars and dollars beyond where you should have jumped in. And then you jump in and then they tell you to sell. And now you took a loss. The service made a win, a quick in and out. And you're wondering, scratching your head and wondering, okay, I need to be faster, right? But type a 7 in the chat pane for those of you who work a full-time job. Again, if you work a full-time job and you just get an alert, you get a notification, then you just need to take action on that notification whenever that arrives, right? And if any of you have questions as we go, I'll do my best to answer it as it makes sense as we go through this. Does that make sense? All right. So let's talk about trend following. Trend following. Here's some benefits to following the trend. Again, trend following, you do not have to follow, you do not have to predict the trend. How many of you guys have spent a lot of time and money thinking about or spending time, wasting dollars trying to guess where a stock is going to go next? It is difficult. I promise you, it is difficult. But what if you follow a trend, and I'll show you how to identify a trend and how to follow a trend. Okay. And then what if you can make money when a stock goes up and make money when a stock goes down? You're direction neutral. You make money as the stock goes higher, make money as the stock goes lower. And now what that automatically does is it automatically lets you hold on to your winners longer. And anything that says, hey, we're going higher, and then it changes direction, you're going to be able to sell those losers fairly quickly, right? You'll hold on to the winners longer and you'll sell the losers quicker. I am going to touch on TradingView in just a few minutes. Yep. And then the third thing is you're able to take advantage of momentum bursts. So imagine a stock traveling in the same direction for 2 to 3 days. That's really all you need for this to work well, right? That's it. Now, most of you have seen a stock chart that looks like this. This is a line chart, and this represents a stock price. Now, does anyone want to guess, based on this line chart, which piece of information is this based on? It's based on what kind of price? Does anyone know? Type in the chat pane. This is we're looking at a 30-minute chart of Zillow right here. Arafat says the closing price, and that would be correct. Great job, Arafat. It's based on a closing price. Now, if you're just looking at this chart alone, you really only have one piece of information, right? Which is the close. That's all you have is the closing price. That's it. Nothing more, nothing less. But what if you had 4 pieces of information? What if we converted that chart that everyone looks at on Yahoo that makes it super easy, and we looked at something that's slightly more difficult, and we have 4 pieces of information? We have a high, a low, an open, and a close, right? So what we do is we get 4 pieces of information now. So we go from a single to 4 pieces: an open, a close, a high, and a low. So what if you were to look at a stock chart like this, and you're able to determine, just by looking at this, you're like, you know what? This stock opened down here and it closed up here. That's a pretty good size candle, wouldn't you guys say? Pretty good size, pretty big movement. Same thing here. But what if all you saw was the closing price? All you saw was this right here, and you didn't realize that was a pretty significant move, pretty big move, right? So now you guys can see a little bit more about why we as traders use a candlestick chart instead of a line chart. A candlestick chart gives us 4 pieces of information. So if we were to zoom in just a little bit more, and we were to look at a bullish candle, most of you who've looked at candlesticks, this might be a quick review for you. And so you have 4 pieces of information: your high, your close, your open, your low. Now, some of you may have, this might be a green shaded candle. In our case, we're using a white and black candle. We're trying to look at the candles kind of independent of any emotion and just look at the raw candlesticks themselves. And so what happens here is a stock on a bullish candle, it opens right here. and it closes right here. This is the movement from where it started to where it ended. However, it made a high and it also made a low. So the stock moved lower, went higher, and then kind of closed right there. Does that make sense? So this is showing you the movement, kind of the range that it made throughout the life of the candle. And today we're going to be talking about candlesticks on a 30-minute chart, 30-minute chart. So what does that mean? That means each candle will represent 30 minutes worth of information. So here's the same thing in reverse. The stock opens here, closes down here. This is a bearish candle. And again, this might be shaded black or red. We prefer black and white. You might be used to red and green, which is fine. Stock opens here, goes lower, goes higher, and then closes here. So you can see this journey, so to speak, of ups and downs throughout the life of that candlestick. Pretty cool, right? And that, again, way more information than if you just had a single piece of information, just the closing price only, okay? So the strategy I'm about to show you has, it uses a specific type of order, and that is called a limit order. Now, a limit order basically allows you to specify the price. So you buy the stock at a certain price that you define or better, right? That's when you enter a trade. You say, I want a limit order. I want to pay no more than this amount. Now, a market order is kind of like going to a fancy restaurant and you're like, hey, I want the salmon. It's at market price. That means you're going to get it, but you're not going to like the price, right? So you're going to get it. So in this context, what it means is we are going to define the price we want. We're going to take it or leave it, the price we want or better, right? So we're controlling how much we're going to spend per share, okay? And this is what I use all the time. I use limit orders all the time for this strategy. And the downside, of course, is sometimes you don't get filled. Your order doesn't get filled. You have an order waiting and you're like, I'm going to pay no more than $50 and it rockets higher without you. That's okay. You want to define the price. You want to control how much you spend. Okay. The good side, the upside to it is you always get the price you define because that's what a limit order is. So what we're going to do is we're going to focus tonight. We're going to focus on building a written plan and a strategy. And we're going to focus on 3 stocks and only 3, and we're going to talk about a strategy that I created called Momo, and we're going to look at it on a 30-minute chart. A 30-minute chart is basically just means each candlestick represents a 30-minute moment in time. So if our market in the US is open 6.5 hours a day, how many candlesticks would we have that represents a day over a course of 30 minutes each candle? Type in the answer in the chat pane. Brad Hale, first out the gate, says 13, and that would be correct, 13 candles. So let's talk about the strategy. What in the world is this strategy? Well, strategy is called trend following, and it's nicknamed Momo. Now, for those of you with an advanced degree, do you think you could, if you got a signal like this that says buy, do you think you would know what to do? Again, I'm picking on people with advanced degrees. Would you know what to do? You're going to buy. Now, where do you buy? You're going to buy at the close of the candle, which is the top part of the body of this candle. The body of the candle, just like with birthday cakes, the candle, the waxy part, that's the body of the candle. The upper piece is considered a wick or a tail. Same thing, there's upper and lower wicks. In this case, we're going to buy at the close of this candle, okay? Now, for those of you also who have advanced degrees, if you do not know when to exit, do you think you could look at a signal like this that says sell and sell at the close of this candle, which would be basically right here on our example? Pretty cool, right? So buy and sell. And I'm going to show you how to get this indicator and add it to your trading view charts at no extra cost. Sound cool? So imagine that we're looking at this stock and we're buying right here on this candle, and none of this has actually happened yet, right? We're buying it as this candle closes. We're setting up an alert. We're getting a notification on our phone, on our iPhone, smartphone, desktop, laptop. And what we're doing is we're looking for this green line to be above the red line. Now, the green line is a exponential moving average, and it just means let's look at all of our closing prices and let's make a calculated average. And this represents what is called an 8 EMA, the 8 EMA, 8 exponential moving average. Now, if you use your own custom charting tool, other than the ones we're talking about tonight, this is a common, very, very common indicator. You're able to add yourself to any chart, whether or not you're using the ones we're talking about, pretty much on your own. You can do this. Now, this red line here represents a 21 EMA. An EMA is an exponential moving average. Just again, it's a sum total. I'm sorry, it's an average, but an exponential moving average gives more weight to recent candles versus previous candles. So the more recent candles get a little bit more of a graduated weight versus older candles. Okay, that is what an EMA is. So in our case here, what we're doing is we're waiting. We can set an alert that says, hey, let me know when these two guys cross. And that's going to give us our buy signal. In this case, we're going to buy at the close of this candle. Now, as long as, I realize maybe on this, you can't quite see it, but this is actually shaded a light green in this area. As long as this green line is above our red line, all right, what do you guys think? Do you think we're going to stay bullish or we're going to stay bearish? Green means we're going to remain bullish. Now, here's the cool part. We don't have to guess what we think is going to happen because our two lines are telling us what direction we are in at this moment. At this moment in time, boom, right here, our lines have crossed and we got a signal to buy. We are going to buy, boom. Now, how much are we going to buy? We'll talk about that in just a second, but I want to make sure everyone understands this is following a trend. Our trend is established. It goes higher. And as you guys see, we buy here. Of course, this is going to be pitch perfect for this class. It doesn't always work perfectly, just like this. However, we buy here, we ride this higher, and then we get a signal to sell over here at the close of this candle. It's actually sticking out of the screen just a tad. We get a signal to sell. Okay, does that make sense? Type a 7 in chat pane if you are tracking and this is making sense and you are super excited to put this into action. All right. All right, again, this is trend following. For those of you in Australia who like to surf, you know that you have to swim out ahead of the wave before it's fully formed, and then that momentum will push the board forward, and you ride out as long as you can until the wave kind of subsides, and you rinse and repeat. Same thing happens here. Yes, great question, Dan. So you buy when the lines cross, not when they meet, I guess when they cross. The lines are just moving averages, Tanner. Great question. They're just two moving averages you put on your chart. When they cross, you buy. When they cross again, you sell. And I'll show you the indicator that we created that actually literally says buy and sell, and it'll tell you exactly what to do. Yep. Great questions. Yep. So what you're going to do is you're going to buy on the signal candle. The question is, what is the signal candle? Signal candle is this guy right here that says, hey, buy right here. Makes sense? So we're going to get an alert on our phone, our desktop, our laptop, and it's also going to say it on the screen. Now, again, for those of you with degrees, advanced degrees especially, can you follow on-screen prompts, yes or no? We make it super, super easy. And the idea of this strategy is really to make sure that you can do this strategy without us. Now, imagine if we create a recipe for you to follow. You don't have to pay us $5,000 to get this strategy. You don't have to subscribe to this, subscribe to that. We're giving this to you free, whether or not you ever become a premium real life trading member. Okay, fair enough. Now, this is what it looks like when you get a signal to buy. Here is what the sell signal like. So let's look at an actual chart. And let's look at a stock like this. And let's say, boom, we got a signal. It's actually sticking out just a little bit. I don't know if you guys can see that on my chart. It's actually this candle right here. I realize it's sticking out, but right here, you're going to buy at the close. Now, let's pretend that we want to spend, let's say that we have a $3,000 account or a $10,000 account. Let's say we want to decide that we're like, hey, I'm going to spend a third of it. Or if you have a bigger account, hundreds of thousands, you can adjust this amount to roughly 20, 25% of your account. Now, you're not risking $3,000, you're spending $3,000. I need to make sure you guys understand the difference. We're going to, in this example, we're going to buy $3,000 worth at $50. So somebody tell me, how many shares are we able to buy if we're spending $50 per share? And the answer is 60. Dan, whipping out the answers right out the gate. So we're going to buy 60 shares. Again, we're just taking, hey, I'm going to buy $3,000 worth and each one $50, boom, 60 shares. Make sense? Pretty simple. And then what we're going to do is we're going to sit back and do nothing. We're going to wait for all of these candles. As we mentioned, there are 13 of these in a single day. So throughout the life of this trade, this trade lasts several days, maybe about a week. And then we're going to get a signal to sell. I don't know if you guys see that. This one's not sticking on the screen. Sell $60 at $62.50. So we went from $50 down here up to $62.50, and we're selling. Again, our lines are crossing, and we're going to sell at the close of the candle here, and we're going to buy at the close of the candle there. So Van, great question. There is no stop loss. However, there is risk management built in. I'll show you that in just one sec. Great question. So imagine you're selling 60 shares at $62.50. How much money have you made? Well, let's do the math. If we were to take $62.50 minus our entry of $50 equals $12.50. We'll take $12.50 times how many shares we had? 60 shares equals, Rachel, out the gate, $750 worth of profit. Now, is $750 life-changing? The answer is probably not. However, what if you're spending more than $3,000? What if you're spending $30,000? Then you're going to add a zero on the end. What if you had 3 of these running at different times? And so you might be in 3 of these at the same time, right? Getting a little warmer. I can see you guys getting a little more excited as we're talking about this. So again, not life-changing money. However, if you look at what our original investment was, gang, $750. And in this case, what we're doing is we're turning $750, we're turning 3,000 into $37.50, right? Which is a $750 gain, which is, someone tell me what percent gain is that? What percent gain? I'll give you a hint. It is more than 20%. Somewhere in 24, 25%. Yes, that's right. Now, how many of you guys, what is the average mutual fund? Some of you guys have mutual funds. What does the average mutual fund give you in a year? In a year, how much? You're lucky if you get 7 to 10. I know some are better, some are worse. What else? 7 to 10, pretty good range. So obviously you're not taking your whole account and spending it on this. However, if we're talking about 3 different stocks we're going to be looking at, and you do the same exact strategy, you're taking a small chunk, taking a risk, boom, it moves in your favor. You get the signal to get in, you get the signal to get out, boom, lock in your profits. Then you rinse and repeat, right? Pretty cool. Again, you get in here, you exit here, boom, $750 gain. So I would like anyone who is interested in this free indicator, if you have not yet done this, point your browser to tradingview.com. you can create a free account, and we will go ahead and set up a, you're able to set up a free account, and I will share with you how to add an indicator that does all this color coding and has these alerts built in for free. Again, it uses this strategy we're talking about called Momo. And what I'm going to do is I'm going to grab some links real quick, and I'm going to throw it into the chat pane. So for those of you who are following along, you are able to copy and paste. Boom, 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 boom. There you go. There is the link. I'll give you guys just a minute. If you are interested, go ahead and open this up. Some of the tools that we're talking about here are free. So there are some limitations. You're able to set up a single alert, which we'll do tonight. If you need more than that, then I think it's pretty inexpensive to set up for a year or for on a monthly basis. I think it's like 12 to 15 bucks a month, something minimal. Yep. I mean, but shouldn't absolutely none of that comes to us. That's all TradingView. It's a tool that we recommend. Okay, so here is the link for TradingView. For anyone who is interested, here is the link. Just put it in chat. Here it is on the screen if you're watching the recording. If you like Thinkorswim, here's the link right here to add to your Thinkorswim. Okay. Now, I realize we may not have time for you guys to all go ahead and set up accounts right now on the fly. It only takes a few minutes to do. So if you've done that, great. That's amazing. We can continue on. For those of you who have not yet set one up, go ahead and add that to the to-do list, cycle back around to it. But this is what it's going to look like once you add it to your, and let me go back one sec. Oops, let's do this. Boom, boom. One other thing is in the notes, how to add it to your chart in the notes of this here. Come on. When you get to this page, there are some instructions on how to add it to your chart. You basically add it to your favorites, and then you go into your chart and you add it on your chart itself. So pretty simple. I will have some questions at the end if you guys need some additional help on how to set that up. Okay. Yep. Thank you for sharing the other link, Zochi. Great. Cool. Any other questions, gang, before I continue? Let's roll. All right. So imagine those of you who work the full-time job, going about your day, you get an alert. Again, only 13 possible. You might get it at some point throughout the day. 13 possible moments throughout the day. Not crazy. And so what you're going to do is you're going to right click on the chart. Once you've added this indicator, the indicator here is called trend following Momo, trend following Momo. You're going to right click on the chart and you're going to click add alert. When you click that, this box right here is going to pop up. And then you're going to choose the condition of trend following. You're going to pick trend reversing, and then you're going to click once per bar closed. Again, this is your account, and you're setting up an alert to notify you, right? You can do a bunch of different things here. You can say pop up, notify an app. So if you have TradingView installed on your iPhone, you can send an alert there. You can also show a pop-up, which means it can play a noise, a little bell. If you're sitting in front of your desktop and you have TradingView open, maybe you're going about your day looking at emails and you get an alert, hey, take action. And then you put a note in here just saying, hey, the trend is changing. And again, you want to take this alert, look at the chart to decide what you want to do. If you want to take a trade or not. It's your account. You're taking risks in placing trades in your own account. Yeah, Brad, the great question. The default is 78 minutes, and this strategy is for a 30-minute chart. So what you're going to do is you're going to add it to your account, add the indicator to your account. Then you're going to choose a 30-minute chart, and then you're going to set an alert. Great question. Great, love it. I love the participation. All right, so let's say that you're going to set an alert for, I don't know, Beyond Meat, okay? And this is what you're going to see. Hey, trend is changing. An alert on Beyond Meat. Again, this is just a notification. You do not have to take action. It's up to you whether or not you want to jump into a trade. It's just letting you know, hey, it's time, okay? Now, again, you're not actually jumping in and out of random stocks. I'm going to give you a list of 3 specific stocks that we just touched on, and we'll review them one more time here in just a sec, but we're going to place alerts on 3 stocks, and we're going to talk about how and when and how many shares to buy to jump into these. Make sense? All right. So we are going to talk about a sample trading plan. Actually, let's come back to, no, let's talk about that. Okay. So imagine your job is to execute your plan and you have no plan. Well, guess what, ladies and gentlemen, tonight you have a plan. Here is your sample plan. Let's run through this real quick. You are only going to be trading 3 stocks, just 3. How did I buy? How did I come to determine these 3? Well, you see, I have a software tool that I built that runs thousands of simulations going back years. And these 3 are one of my favorites for a 30-minute chart on a Momo strategy. Okay, these are my 3. Now, does anyone know anything about these 3 stocks? BigCommerce is e-commerce, Marvel, Zillow. Dan, great question about the webhook URL. We actually have an automated platform. Reach out to me if you're interested. We actually have an automated platform that receives webhooks, and you connect it to your broker, to Thinkorswim, TD Ameritrade broker, and Robinhood, and a few others. Imagine automation, right? It's pretty cool. Okay, so someone asked, what about a stop loss? Well, it does have risk management built in. Of course, when you jump in, it'll tell you when to jump out. You're not holding these stocks as they go to zero. Okay, so if you are, in our example here, we're spending $3,000. If you have, depending on your account size, maybe that's 20% of your account. Okay, maybe you have a $10,000 account. Maybe you have more and you want to change and adjust this. But what you want to do is you want to define how much you're spending, and you want to make that a consistent amount. One of the things I see people all the time is like, I know it's going to go higher, so I'm going to throw $50,000 in it, and it doesn't move quite like they think. And they obviously, sometimes not all these trades work every single time. Okay. Remember, we talked at the beginning, there is no 100% win rate ever. Some of you are looking for it. So in this case, we're going to be spending $3,000 per trade. We're not risking $3,000, we're spending $3,000, right? In our example, we bought 60 shares at, that's an at sign, $50. 60 shares, $50. So we're spending $3,000. Obviously, if you have a bigger account, your share size, the number of shares you're buying will be higher, right? And then you're risking kind of a, it's not really a defined amount, but the risk is, it is set. It's not the exact same amount every time because you're waiting for the trend to follow. So imagine jumping into a trend and it doesn't go the right direction. It goes against you. It'll give you the alert signal to sell, to just take a small loss. Now, for those of you who are looking for strategies that never have losses, again, there's no such thing. But imagine taking a small paper cut. No one's gonna, on a $3,000 spend, maybe two of them don't work out and you take a $50, $70 loss, right? A few times in a row, and then boom, you hit a $750 win. That win by itself makes up for more than enough of those small paper cuts. That's what I want you guys to think about, okay? It's not always about every single trade is going to win. Therefore, if it doesn't do that, therefore I'm going to keep searching for a new strategy every time I hit a loser. That's just not how it works, okay? Again, in this case, you're going to spend the amount depending on what the close of the stock was. In our case, you guys remember what the close of the stock price was. So we're going to say $3,000. In our example, it was $50. The close of the stock price is $50. Now let's run through another example. Let's say $3,000 and the close of the stock price in this next example is $60. How many shares can we afford? How many shares can we afford? Should be easy, guys. Brad, Nola, 50 is correct. We can buy 50 shares. So then we would say, I'm going to buy 50 shares. In our example, do you guys remember we're using Big Commerce, B-I-G-C, Big Commerce. We're going to buy 50 shares. Again, this is a formula that you're using. You're not always buying 60 shares no matter what. Again, it's a calculation. And then the other piece of information you would know is a limit quantity. You're going to use a limit order, a limit. You're going to buy using a limit order. Okay. So let's do a quick review. In our example, we're going to do a $3,000 spend. What do you need to place a trade? Well, you need to know what stock you're looking at. You need to know quantity. So in our case, we're using 50 shares. We're going to do limit buy order at what price? At $60, right? Is that everything you need to know to place an order? I do not use a market order to exit. However, Stock Dog, I'll show you a few variations if we have extra time. Great question. Limit buy at $60. What about how long do you want your order to open? Does anyone know what GTC means? It's not Grand Theft. Good till cancel, good till close. Yep, exactly. Which means we want to let our order stay out. Maybe it's more than a day. We keep it open for maybe a day or more, sometimes 2 to 3 days. Good till cancel. That's right. So with this information here, ladies and gentlemen, do you have enough information to place an order, to place a trade? Again, you set up an alert, number 1. Number 2, you're notified. Number 3, you place an order, right? So imagine if you were to take this plan, and by now some of you have taken notes on this. Some of you have done what I would have done and taken a screenshot of it. This is your sample plan. Now imagine you are judged based on how well you execute this plan, not based on whether it makes money. Here's the thing that most brand new traders fall prey to is thinking, if it's not making money, therefore I'm doing something wrong. Well, if it doesn't have 100% win rate, there's going to be some losers. Not everything works, just not all the time. Now, what if I give you the world's most popular, most successful strategy and you don't follow it exactly? Will it still be the world's most successful strategy? And the answer is no, it will not. It will not. It will turn into a losing strategy. Now, again, ladies and gentlemen, I just want to make sure you understand following the plan is your only job, is to execute the plan. If you execute the plan and the plan takes a small loss and life goes on, it's a paper cut, it's no big deal. I don't think anyone on this call is going to lose sleep over a $50 or $70 loss. No big deal, right? Life will continue. Again, your job is to execute the plan. If the plan tells you what to do and you execute and follow it exactly, you followed the plan. Nothing is wrong. Everything is how it should be. It just didn't work that time. So then you do it again and again and again, and then you hit a big winner, which makes up for all of these losers. Again, if you lose $50, then you take another trade, you lose $70, and boom, then you hit a $750 win. You don't even worry about those small paper cut losses, right? Okay, so imagine you practice this plan. Imagine you spend 30 minutes a day just playing with this strategy. looking at different, looking at our 3 stocks, but looking at different points in time, going back in TradingView allows you to do that. And I'll show you at the end, if we have extra time, how to go back and do that. But imagine you spend time practicing this, and think of this like batting cages for baseball players. Where can you go to practice, to warm up? No risk of losing money, right? The markets are closed. Usually when I'm back trading, I'm just going back in time and I'm saying, okay, pretend that, I'm in the middle of COVID and I'm playing with this strategy. Imagine, Mario Cuomo, Andrew, the former mayor of New York, having his daily press conferences, and the markets are falling off a cliff, and I'm in this strategy. What's going to happen? Imagine going back and testing this at the beginning of 2021. Imagine going back in time and testing this at different points, maybe early September of this year of 2021. You're going back in time and you're practicing this to make sure you're following your plan. Now, one of the questions we get asked a lot is, when I'm back trading, what am I supposed to be looking at? Great question. You're supposed to be running your plan. Imagine not having a plan and then trying to practice it. Well, slightly difficult, right? But imagine you're looking at this plan. You're like, okay, I'm waiting for the signal. I get the signal. I'm going to buy $3,000 worth. You do the math. You put in just a faux order, pretend order. You're like, okay, I draw on my chart. I bought 50 shares at this price. And then you're clicking each candle and you're playing it out, and then you get the signal to sell, and you're just practicing it in a safe environment. That's what I'm recommending, ladies and gentlemen, is that you practice this. Now, why in the world did I pick these stocks, and why in the world am I using a 30-minute chart? Well, again, I actually have spent time testing this. If you were to trade Zillow long and short, in this case, we're just talking about long, but imagine you made money on the way up and you made money on the way down on Zillow year to date, as of an hour before the market closed, you would be up 63%. Now, does that include some losers? Absolutely. These are winners minus losers, the net amount, 63%, okay? Again, this is historical. This does not necessarily mean this is what you can expect in the future, but I want to show you these are way better than the 7 to 10% the stupid mutual funds are offering you. Way better. Just think about it, okay? Number 2, Marvel, long and short, 73.3. And then finally, Beyond Meat, 49.83. Long and short. Make money on the up, make money on the down. Now, some people who are like, hey, I want to make money both directions, you just have to be mindful. If you can make money both directions, what does that mean about losing? That means you can also lose in both directions as well. So just be mindful of that, right? Now, if you were to buy Zillow and do like buy and hold, or Marvel or Beyond Meat, if you were to buy and hold over the same time frame, this will yield a way better result. So imagine buying Marvel at the beginning of this year, buying Zillow, and buying Beyond Meat. And you did that in one account, and you had a separate account where you traded in and out. These results right here literally would have resulted in a way better return. Make sense? Okay, again, here is the indicator in case you have not got the link. Again, if you haven't set an alert, boom, this is how it's done. Gives you something that looks like this. Van, I did mention BigCommerce. I apologize. I took a screenshot of something else, but it's actually the 3 stocks that we mentioned. It is Zillow, Marvel, and what do we put in here? Zillow, Marvel, and BigCommerce. Yep. Apologize. I misspoke. Zillow, Marvel, and BigCommerce. Yep. Okay. Now, ladies and gentlemen, here is what I want you guys to think about. Okay. The moment you place a live trade and it doesn't go in your favor, you're going to freak out. Okay. My message to you is don't freak out. It's going to be okay. It's going to be okay. Not Beyond Meat. That's correct. Sorry. It's going to be okay. Okay. Now this right here is what most people focus on. This is what we have control on. control of. This is what people focus on. Again, this is what we control. We control our risk. We control our cost, how much we're spending. We control how much time we're putting into this and our behaviors, whether we're emotional or whether we are able just to stay calm and follow the plan. The one thing that we don't control is return. But guess what most people focus on? They focus on the thing we don't control, right? We don't control that. So again, if you've not yet set alerts on this, absolutely do that. Let me double check one thing real quick, and I can share. I'll share at the end. If you guys want a little bit more of a live example of setting an alert, I can absolutely do that. Yep. We do. It basically is just this. You go to a chart when you have the indicator added, you right click, and then you go to trend following once per bar close. Yep. And make sure, again, you do that on a 30-minute chart. Okay. Now, oh, and by the way, you are doing this for each stock. So each of the 3 stocks, you're going to do it for each one of those 3 stocks. Okay. Each one of the stocks, you set an alert for each one. You're not setting an alert for all 3 at once. You're setting an alert for BigCommerce, for Marvel, and for Zillow. Okay. Now, again, before I tell you about how to do orders and how to get live money in there and start making money, again, disclaimer, risks associated, know your risks before making any trade. You're the only one pushing the buttons, so it's your responsibility. Okay. Nola, I will come back to that in just a minute at the end when we'll do another, I'll do a live demo of setting the alerts. Yep. Okay. So here's the moment you guys have all been waiting for. What to do when you get an alert. So imagine you're going about your day, you get an alert on your phone or your desktop, and you're like, oh my gosh, I got an alert. What am I going to do? Well, here's what we're going to do. We're going to first talk about TD Ameritrade. And when I say TD Ameritrade, I took some screenshots of Thinkorswim. TD Ameritrade actually has 2 platforms that they use for mobile orders. I'm going to show you some screenshots. In my case, I took examples and screenshots of Thinkorswim. I think out of the 3 brokers, as an American, Thinkorswim has a little bit more functionality, a little bit more of advanced features. So that's what I prefer. That's what I use. I do have screenshots to share with you guys from Robinhood using one of my kids' account. So I'm going to walk you through both of those. So just sit tight. Okay. You guys ready? So we're going to go through Thinkorswim on the mobile. Again, because the purpose of this is to get an alert. You live your life, do your thing, work your job, and get an alert. It interrupts you a little bit. It says, hey, time to place an order. And here's what you're going to do when you get an alert. When you get that little thing on your phone or the jingle on your desktop that says trend changing, trend reversing. Okay, so this is what, when you log in, this is what it looks like. Thinkorswim does have a little bit of a learning curve. However, I'm going to walk you through exactly how to set up an order. There's tons of advanced things you can do in it. I want to show you guys in a beginner's class like this how to place your first trade with something that might be a little bit intimidating, but I'm going to walk you through it. Hold your hand. So it's going to be okay. All right. Number 1, you click this little icon at the bottom. Pretty easy so far, right? You click trade. In our example, BigCommerce is one of our stocks. So you're going to click BigCommerce. You're going to search for it at the top here. Make sense? Click. You're going to type BIGC and it's going to say, oh, you mean BigCommerce, right? So you type in the ticker symbol and it'll give you the company. Then you click on the company and then you come to a screen that looks like this. Boom, order edit. Again, in this case, we want to buy 60 shares at $50 using a limit order. And again, we then want to make sure we're set this to good till cancel. Pretty simple, right? Any criteria for applying it on other stocks? Any criteria? I'm not quite sure what that means. Any other criteria? This is the details of how to execute this exact strategy. Here's the thing, ladies and gentlemen, this strategy does not work on all stocks. So if you were to try this on Apple, it'd be better just to buy Apple and hold it long-term than to try to trade in and out. That's why I'm giving you 3 stocks that it works really well on. Okay. Does that make sense? Again, boom, that's all you do. I apologize, I did not click. There's a review button up here at the top, right here. Oops. Why is it not drawing? The review button right here that you're going to click. Oh, draw. Okay, there we go. There. Come on, work with me. There's a review button right here that you're going to click to punch your order in. Okay. Makes sense? You guys think you could do that? You get an alert, you put in order, few steps, not hard. David is asking the question of the day: what makes the strategy good for these stocks and not others? Great question. The answer, I'll show you live here in just a sec, but the answer is thousands and thousands of automated tests. That's a short answer. Imagine doing thousands of back tests to tell me what stocks work the best on, and then coming up with the answer to what stocks to trade, which is why I don't recommend you just take this strategy and throw it on any and every stock. There's some stocks that tend to trend better than others. And again, what we're really looking for are stocks that tend to move in the same direction for several days in a row. That's really the basics. Okay, makes sense? Everyone with me? Thinkorswim, mobile, in and out in, what was that, 4 minutes, something like that. All right, let's talk about the next most popular tool, Robinhood. Those of you who have an open account in Robinhood, you want to click this little search icon at the bottom. Pretty simple. You want to search for BigCommerce. It gives you this as a result. You click on it and you come to a screen that looks like this. Now, ladies and gentlemen, do you see a big button that tells me what I want to do? I want to buy. I click the buy button, and then I come to a screen that looks like this. Now, before I throw an order out, there's one little twist on Robinhood. Takes a couple extra steps than Thinkorswim, which is partly why I like Thinkorswim a little better. It is a little more complicated to use, but it's a lot less clicks. And up at the top right here, you guys may have never noticed this. Up in the top right is this shares button. When you click on the shares button, you want to define a limit order. Now, what is the difference? Well, the difference is this is currently set to buy at a market price. You guys remember us talking about market versus limit order? A limit order, you want to define the price. At a market price, it means you're paying whatever the current price is. In this example, it's actually $50. However, let's say it's $50, 51.0. Let's try again. Imagine the current price is not $50. Imagine it's $51.20. Do you still want to buy it? If the strategy says buy it at 50, do you still want to buy it at 51.20? The answer is no. The answer is no. So you do not want to buy it at 51.20. You want to buy it at $50. Okay. So what do? Well, we go up here to the top where it says shares. We click on that button. And then what happens is we see a new screen that looks like this. And it says, oh, hey, which type of order did you want? Now, Robinhood makes money off of market orders. That's why they offer the whole thing for free. They don't charge commissions. It's because they're able to collect fractional pennies when you use market order. Okay. We won't get into the whole depth of the whole business model, but we'll just say that they make money off of you paying market price for stocks, which is why it defaults to that type of an order. Okay, anyone see limit order on the list? There it is. Boom, we click limit order. Then we're going to come to something like this, and we're going to say, what price do you want to buy? So if the price is currently at $51.20, and we say, I want to wait for $50, it may or may not come down to that level, which is fine. We want to define what the price is, and we want the trades to come to us. In this case, we then click continue. Again, lots of clicks for Robinhood, but we're not done. We have a few more clicks to go through. Again, we're going to say, okay, I want to do market hours. Now, market hours, this is not good till cancel. What this means is, do you want to trade during extended hours or market hours? Honestly, I'm not sure, but most brokers charge you extra if you're trading after hours. I always prefer to just trade during the market hours, so that's what I always click. There are going to be some variations between whether you get filled or not filled during market hours. There's advantages and disadvantages. I always recommend market hours. And then once you click on that, boom, one more piece of information, which is this was placed after hours. And so in this example, this is showing 3 p.m. tomorrow, meaning the next trading day. You can absolutely do that, or you can click this. I don't recommend, I wasn't able to figure out how to change this to like 1 or 2 days, right? So good till cancel. Normally you define how many days that goes through, but that is how that is done. So I recommend you choose one of these two. Obviously, you have 2 choices. Pick one. I would typically use the 3 p.m. tomorrow, but I don't like this being open forever because the trend can change. Obviously, you can want to be bullish and it moves higher and then it falls off a cliff, and then you don't want to get in as it's falling off the cliff. So Tanner asked a great question. When you get the alert, are you finding the close price you're buying on TradingView or Thinkorswim? The answer is yes, you are. Absolutely. And I can actually show you guys how to send that price, the dynamic closing price, through the actual alert itself. So there's no more searching for what that is. We can go ahead and set that up in the message of the alert itself. So we can absolutely do that. Okay, moving along. All right, boom. After this, ladies and gentlemen, you're gonna click the continue button. And then you'll come back to a screen like this. You're going to change, you're gonna enter the number of shares you want. And it will tell you your cost. And then you're gonna click, boom, swipe up to submit. And then you're going to see this amazing screen that says order received. And that just means they're going to be munching on they're going to be processing your order. Again, if the price is moved higher and you're waiting for it to go lower, it's not going to get filled right away. The price action has to move back down to your $50 level in this example. I do not have screenshots for Questrade. I apologize. I probably should just make a standalone video for that. But yeah, great question. Okay, so what is the downside to this strategy? What is the gotcha of this strategy? Well, if it says buy, then sell, then buy, then sell, then buy, then sell, that's the gotcha. That's the chop, right? And just like a teenager changing their mind over and over, I know you guys are here because you want to learn the strategy. This is the downside of the strategy. You might take some small paper cut losses, and then as you guys can see, obviously right here, you're able to lock in some gains, some gainage, right? You're able to buy at the close. It runs higher. Sometimes people do have trailing stops. Obviously, you're not going to time the high exactly, and you take a small win right here. But once you get some nice runs higher, just like this, and then exit here, that more than makes up for that type of a move. Again, if you're trading short, a little bit more of an advanced thing. We haven't really covered tons tonight, but you're able to take the trade short, which means you make money on the way down. And so in markets like this, where it chops around a bunch, you just need to be sometimes aggressive and taking the trade itself and locking in the profits, right? So you still take the trade exactly where it wants, but sometimes you don't let it run the full course. Sometimes you just exit early, okay? Any questions so far? Any other questions? Great questions, Rachel. Maybe what I'll do is I'll make a, I'm a US citizen, so I don't have access to a Questrade account, which is partly why I didn't do that. But I did ask a few of our traders to send me some screenshots, and I did get some screenshots, but it was a little late after I'd already kind of built this slide deck. So maybe what I'll do for you, Rachel, is I'll record a video on how to do the same thing in Questrade, and we'll post it. Yeah, I can do IBKR. Absolutely. Let me take a note of that. Questrade IBKR. Yeah. Of course, I'm going to do my favorites, which would be Thinkorswim. But yeah, absolutely. Great questions. All right, you guys are here to learn, and I know that you guys love taking quizzes, right? I heard you. I heard that rumor. So let's do a quick review. Make sure we're all on the same page. Number one, what are the two moving averages that are used? What are the two moving averages that are used? The 8 and the 21 exponential moving average. That is correct. Great job, Michael, David, Stock Dog, Asif. Yep, perfect. Okay, number two, what is the trigger to enter bullish? What is the trigger? Meaning when do you know? The buy signal, yep. And also when the 8 crosses above the 21. So your green line's above the red line. If you're using TradingView and you're using this exact indicator, it will absolutely tell you, hey, buy, hello, buy now, right? It'll tell you when to get in. That's exactly right. And basically the 8 crosses above, crosses up through the 21. Exactly. Now, number three, what is the order type that is recommended for this strategy? You guys remember what type of order? A limit order. Very good. A limit order. What time frame does this strategy work well on? What time frame? 30-minute chart is correct. 30-minute chart. Now, we haven't touched on all of the details of this, but can you make money when the stock goes up and down? How do you make money on the way down? What are you doing? How do you do it? You short. You're shorting. So you're selling to open and you're buying it back lower. You're selling it at $62. You're buying it back at $50, and you're capturing that $12 difference in this example, right? So the answer is, of course, yes. You can make money on the way up and way down. That also means you can lose on the way up and lose on the way down, which does happen sometimes. It's not, you just have to work through it. It's part of the process. If you exit early, someone asked about capturing, let's see, do you exit early if profits are up big? Van asked that question. The answer is yes, especially in choppy markets. You want to lock in your gains quickly. You don't necessarily have to let the whole trade play out, but keep in mind, you might miss out on a huge run if you capture your profits early. You don't know whether or not you're going to be glad you exited early or you're going to be upset you exited early. You don't know what the future will hold. So obviously, if you exit early, you got to be okay with that no matter what happens. If your rockets higher and makes another $30 without you, you just have to know that, okay? Now, my next question, though, is if you exit early, when should you re-enter? So meaning if you capture your gains and you lock in a trade, you lock in a gain, and it continues going in that direction, so you haven't got another signal, what do you do? You wait for the next signal candle. Now, so there are variations of it with pullbacks, retracements. There's tons of things you can do with this. I want to share with you guys the vanilla strategy. I trade this with options. I use collars on this. I do some advanced stuff. We'll just say it that way. I do some advanced stuff on this. I'm going to give you guys just the basic strategy because this is kind of targeted for beginners. We're not really talking about options trades. You can absolutely do options with this. We're not talking about the here, but this is just the vanilla, plain vanilla strategy. Okay. Let's see. Dan asked the Momo should it not take the park list just off the alert thresholds? Correct. That's correct, Dan. It is a calculated. So we use thousands of calculations. And I can show you guys that tool in just a minute. But it absolutely the returns are based on letting the full trade play out. However, if you're able to trade it manually and beat that, then good for you. You're able to do better than even what the results say. Yep. Okay. If you were long and get a sell signal, do you sell your long position and sell short at the same time? Great question, Ronald. And the answer is it depends. If you're only trading the long side only, meaning you're only buying and holding and selling higher, and you get a signal to sell, at that point you sell, you go to cash, you wait for the next signal. Okay. If you're trading both sides, then yes, you could play both sides, but also keep in mind, again, disclaimer, that being able to short stocks overnight, it's a different type of risk you have to be mindful of. But yes, you can absolutely do both depending on what your plan says. So am I in the stock always? The answer is sometimes. So in our trading robot that we've set up, it absolutely is in always. So it's either in or it's waiting for an order to fill, one of the two, right? So it can exit like a bullish trade exit and waiting for a short trade to fill, which technically isn't in the trade at that point. You're just waiting. So it's an open order waiting to get filled. Yep. Yep. And for those of you asking for the recordings, it absolutely will be available at the end of this class. We will send it out to you. We will link it up on your dashboard. Absolutely. Great question. Okay. You guys ready for a couple more? You got a couple more in. I'm feeling it. All right, a couple more questions. What are the 3 stocks that we discussed in class? Of course, Beyond Meat was got mixed in with my screenshot, so that is not on the list. What were the 3? Big Commerce is one. Look at you guys whipping out the answers. I love it. Zillow, Big Commerce, and Marvel. Again, 3 very different industries. These are not all software companies. These are not all real estate companies. These are all not media companies, not all in the same industry, which means they're going to pretty much move independently. They're not all going to move in one direction or the other kind of in tandem, right? They're not necessarily correlated. So that means that one stock might be working really well, one might be kind of fluttering, going sideways, and one might be losing small. Again, the one that wins is going to more than make up the rest of them. But yeah, absolutely. Here's a question, ladies and gentlemen. Why do we pick these 3 stocks? Why those? Why in the world do we pick those? I have a fancy simulator. That is true. Because I back traded it. Actually, I back tested it. Yeah, back trading, back testing, slightly different. Back trading is you're manually kind of walking each candle. Back test is a computer simulated thousands of trades in half a second type thing. Yep. Yep. Absolutely. Thousands of back tests suggest high probability in differing industries. All right, ladies and gentlemen, I am at the end of my presentation. I am shared with you what I have for you. I will show you in just a sec a few things, but I do want to know if anyone has any additional questions. Any additional questions? You guys have been great. No questions. I answered everyone's question. Either that or my internet connection is choking. Okay, here we go. Here are some questions. Why do you use the 30-minute chart versus 78? Great question. So on choppy timeframes like this, I actually use both, but different sets of stocks for both. 78-minute chart, 30-minute chart, different sets of stocks for each. I've actually run tests on a 30-minute chart and 78-minute chart. Some stocks do better in one versus the other. That's why we have 2 buckets of stocks. Tonight, we're talking about the 30-minute time frame and what works best on that time frame. Yep. You need margin to short, right? To short the shares themselves, yes. If you are interested in learning how to trade options, you don't necessarily need margin to trade options. You can buy a put option, which means you make money on the way down. So yes and no is a short answer. This actual trading of shares, shorting of shares, yes, you do need margin. We have to manually place these orders, not automated somehow. Yes and no. Great question. So to set up the alerts, you get an alert and you're able to place the order manually. Again, there's just 3 stocks, so not a lot to have to worry about, keep up with, and manage. Maybe on a weekly basis, you might get, say maybe 5 to 10 alerts throughout a whole entire week on these 3 stocks. We do have some automation software. Yes, it is web-based. Yep. And I can show you guys how to create a free trial if you're interested. I can absolutely do that. Let me cycle back around to that in just one second. Let me answer some more of these questions. Wow, we're coming in fat, hot and heavy. I love it. How do you get out of a trade if it drops? Stop loss based on a calculated R, a SIF. Great question. Let me cycle back around to that and show you on the chart here in just a sec when I go through the chart. But great question. Trying to put an alert on TOS seems to be looking in the wrong place. Alerts on Thinkorswim are a little bit more complicated. That's why I prefer TradingView for charting, and I just throw the orders in. I use TradingView for charting, and I throw the orders into my broker, into Thinkorswim. Can we use TrendSpider too? And why did you pick Trend Follow? I'm not sure you finished the rest of your question there, Ronald. Can you set up a stop loss when you place a trade in Thinkorswim? Yes, you can, but be mindful that you might hit a stop loss and then the trade continue in your direction. The idea is to stick with the trend as long as the trend is still going in the same direction. So if a stock is bullish and you get a signal to jump in and it's chopping around up and down, as long as that green line is still above the red line, it's still in. So you're able to do that. Can you invest long-term on these stocks as well? Absolutely. Absolutely. Okay, so TradingView. So can you use TrendSpider? Why did I pick TradingView? I like TradingView. We all have our preferences, but for me, I'm able to write, well, let's just say I can do some nerdy things. And I can write some Pine script to make it do some fancy things. That's the short answer. That's what I like to do. I do have a 20 years of software, or 23 years of software experience. So again, you don't have to have 23 years of software experience to do this. I built some of these indicators and stuff for you guys to make it easy for you, to tell you when to get in, when to get out, and when to lock in your profits. So, yep. And Tabitha, yeah, absolutely does default to market price. I didn't realize that either until maybe a month or 2 ago. Yep. Yep. How often do you keep with trading the 3 stocks? Can you show us how the backtest works on other stocks? Yeah, absolutely. Give me 1 sec. When you get the alert, is it at the close of the 30-minute candle? It is. So you set a limit buy on the next candle. So it's basically on the close of the signal candle, right? So I'll walk through that. If it never retraces, then your limit order does not fill. That is absolutely correct. It is very, very, very rare that happens. It usually retraces plenty, sometimes chops all around. Sometimes, like I showed you in previous slides, it does chop like the dickens. So like on this slide right here, right? Get in, get out, no, get. So this is common, this type of chop. So, yep. Let's see what else. Is the sell cross signal same as the buy, meaning it's buy, sell on TradingView, but on different brokers like TradeStation, would it be just as crossing? So yeah, crossing, when those 2 lines cross, that's the buy. And when the green is above the red, that's the buy signal. When they cross and the red is now above, that's the sell signal. But yeah, great question. If you use it on a different platform, yep. Any suggestion for back testing tools? TradingView has amazing tools. I'll show you that in a sec. Let me add that to my list of stuff. Cool stuff to show you guys. Great questions. How do I add alert? I'm on Zillow menu options. Sorry, we'll review again. Stuck. No fear, Tabitha. I will help you in just one sec. Thank you, Christina. I appreciate it. Pivot podcast. Yep. Yeah, cool. All right. So let me grab a link and let's jump into some of these stocks. Let's take a look-see. Let me do this real quick. Let me drag this over here. Boom. Can you guys see my stock chart? Yes or no? Okay. So what I'm going to do, ladies and gentlemen, is I'm going to run a simulation. And right now we're looking at BigCommerce, and this is what you guys have asked for. Okay. So imagine that I'm going to go back in time. Let me move some toolbars out of the way. And let's say that I'm spending, in our example, we're using $3,000 of initial capital. And we're going to go back to the January 1st of 2021 till now. Okay. So we're going to go back in time and see how well we would have, if we take every single trade, both long and short. So I'm able to choose long, short, bullish, bearish, or both. In this case, we'll say both. And if I was, this is TradingView, the tool. And again, we're looking at a 30-minute chart. For those of you who are watching closely, you'll see our net profit on $3,000 would have been 62.74%. If we were to go long, it made 24, 25%. Short would have made 36. Okay. So essentially what this is saying is this plus this equals this. This short plus long equals 62.4%. That's kind of what we're looking at. Now, someone throw out a ticker symbol in the chat pane and we can go look at another one and see how well it compares in just a sec. But what I'm going to do is I'm going to go ahead and run another test on some of our other Marvel. Okay. Again, 72.99. Can you guys see that? I know the text is kind of small. Long plus short. Short plus long equals 73%. Again, our test, what we're running right now, our test is based on what? It's based on a $3,000 account just from the beginning of the year. Just this year, ladies and gentlemen. This is not a 10-year holding time frame, just since the beginning of this year. Okay. Finally, let's look at BigCommerce. You'll see same thing, 62.74%. So this, let's do it this way. This equals this plus this. Boom, boom, boom. Make sense? Okay. Shoot, did I just do Zillow or did I do Marvel? Zillow, Marvel. Okay, now, question was, why? Why did I pick those? Let's take a look at some others. Okay, now here's AMD. Here's AMD, ladies and gentlemen. AMD, if you went short, would have been losing. You'd have lost. You would have made a tiny amount, obviously making $10 for the year on $3,000 is not super exciting, not probably worth your time. Be better off doing other things on AMD. And then someone else asked, Twitter is actually not bad. Yeah, Twitter's not bad. 132% on Twitter. The thing I like to look at is this. I like to look at this chart here that shows me the profit curve. So this is steadily increasing. I like that. I think that's solid. Twitter is a good one based on our test. The other thing I like to do when I run these tests is I like to go back and say, okay, how well would it have performed in the craziness that we know as 2020, right? How well would that have performed? And you'll see that actually we would have given back some gains. So, right. So if we just ran 2020 by itself, let's do that. Just 2020 by itself in isolation, you would have made a little bit you would have lost money shorting, made money. So again, some of these aren't just for the 1 or 2 year time frame. I'm looking at on multiple years. We're looking at 2020 by itself, 2021 by itself, collectively, separately, right? And great question about the exclamation point. And that typically is great question. And that just means that the stock went lower, even though it was a buy signal candle. So that's considered like a fade candle, where the stock is moving the opposite direction of the signal itself, right? So if it's saying get in and then the stock's going lower. So for those of you who are options trader or interested in options, buying at a lower closing price would be buying call options when you think the stock's going to higher at a lower closing price is more desirable than if it's going higher, right? So the we'll say the implied volatility is chilled out just a little bit. Brad Hale, great question about the strategy tester. No, the strategy tester is a piece of software that I created. That is not, it's not a free tool. It's just something that I created that I use. So, yep. Let's see. Let's look at one other one, ladies and gentlemen. Apple. You guys think Apple's going to do well with the strategy? It's okay. It does okay. 64%. If we were to look at it over the course of 2 years, 64% actually goes down, which means one of those years was a losing year, right? Upwork. Let's take a look. Upwork. It would have been losing. I actually like stocks that do well in both long and short. So you're able to play both sides if you want. So imagine a stock goes up 10% and down 10%. If you were buy and hold and up and down 10%, you're back at zero. If you're trading both sides, you could have locked in 10% on the way up, 10% on the way down, 20% kind of on average. But in this case, it's showing that our short side would not have done well. Again, just like anything else, this is looking backwards, is historical. This does not necessarily mean that this is automatically going to work in the future. But after thousands of trades, the cool part is you can see all the actual trades it takes. So if we're going to go back to a winning one like Twitter, here's what you can kind of think of and expect. You're going to take a small loss, small loss, small loss, 4 losing trades in a row. And then boom, you're going to, 4 losing trades in a row. And then boom, you hit a $60 win. Not life-changing money, of course. However, here's what our equity curve would have looked like. This is what it would look like. You would have been up, you would have been down, you would have been kind of all over the place. I typically stay away from these because what this suggests is that there might have been a period of time where it won, but obviously through this kind of time frame through here, through the first 150 trades, it just chopped around. It went up, it went down. Just be mindful of that. So I typically like ones that are like steady increase, not necessarily the ones that do the best historically. The ones that do best historically did not automatically do the best going forward. Make sense? Okay. Let's see. One other question was about setting up alerts. So let's pretend that you have the alert set up on Twitter. What I'm going to do is I'm going to go here. I'm going to click add alert. Okay. I'm going to choose trend following. I'm going to choose once per bar close, and I'm going to choose trend reversing. Now, for this example, this is Twitter. I can say, hey, the Twitter trend reversing, and I can actually use like a variable where it'll pass the $ of the actual closing price through to me. So actually, it's 2 brackets, something like this. So you see down here, there's like a placeholder for close, and I say Twitter trend changing, boom, closing price. So you could say something like this. You can say buy at blank at the closing price. Doesn't say the word close, actually sends the dollar amount through to you, to your alert, to your phone, to your iPhone, your Android, your desktop, wherever you've set the alerts up. Yep, great question. Okay. Let's see, I don't have once per bar close or per minute boxes. Make sure you have trend following selected first and you're not using Twitter. You want to use the alert built into the indicator itself. So you're going to choose trend following first, then you're going to choose trend reversing, once per bar close, And then you're going to type out a message just like this. Now this will tell you, this will be, make sure you have this set on the 30-minute chart too, ladies and gentlemen. So you'll see over here on my screen, I have a 30-minute is highlighted and 30-minute here, which means I'm looking at a 30-minute chart. This, what we've reviewed all the way through this class, everything is based on a 30-minute chart. So make sure you have that right. Otherwise, you're going to be taking the wrong signals on the wrong time frame. Makes sense. Okay, let's talk about when somebody asked about a stop loss. You're absolutely able to do that. Who is interested in learning how to actually back trade this? We've run a few back tests as an example. Let's go back and back trade this, shall we? Okay, so let's use Twitter. Actually, let's go back to something like big commerce, something on our list. So let's go back in time and let's go back to right here. Let's do this live. And so let's say that you're able to trade long and short. You're able to make money on the way up, way down. In our example here, you would short right here at the close of this candle right here, right? So in our example, the close of the candle, if you look up right here, the close is $60.99. So in our example with $3,000, you would basically say $3,000 divided by 60.99 equals a certain number of shares. And the answer to that is $3,000 divided by 60.99 is basically 49 shares. Okay, 49 shares. So at the close, let's do it this way. Boom, boom. At the close of this candle, get rid of that. The close of this candle at 60.99, we're going to short 49 shares. Okay, now again, how do we come up with that? It's basically our spend divided by closing price. So spend divided by closing equals a certain number of shares. Boom. Okay, now once we've done that, this is a pretty nice trend. Those of you who recognize that the red line is above the green line, that means we're in a downtrend. Again, if we're following the trend, it doesn't matter which way we think it's going to go. It doesn't necessarily matter. And you guys can follow the trend and stay in the trade as long as you want. If you want to jump out early and lock in early gains, be my guest. That's super helpful in choppy markets like we're in right now. We're up one day, down one day, up one day, right? Super, I won't fuss at you if you lock in gains early, but don't jump in, don't jump back in until you get another signal candle. That's my only thing, okay? And then, so what you do is boom, you would exit right here and you would, the close of this candle, again, if you look up here, that C there represents $55.99. The C represents the closing price. So you would buy to cover at $50. What is it, 50, 55? Buy to cover at 50, sorry, 55.19, way off. 55.19, boom, 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 boom. All right, in this example, ladies and gentlemen, someone tell me how much we profited. We started at $60.99. Take $60.99 and you're going to subtract 55.19. That gives us a certain amount. And we're going to do that times the number of shares we had times 49. I'm going to do it real quick on my calculator, 60.9, because I can't do all that in my head. 55.19, $5.80. 5.8 times 49 is 284.20. There we go. 284.20. 284.20, and that's profit. That's not how much we spent, right? That's how much we gained. We spent 3,000, so 3,000 became 3,284. Make sense? So imagine we took that trade going lower, but look at what happened right here, guys. Look at this right here. This right here would have been a quick paper cut in and out, right? in and out. So you enter here and you close here. So you would have taken maybe a $2.50 loss, something like that. No big deal, nothing in the world. Boom, you're in, you're short. Okay, so imagine that you're setting up this trade again. You got short, you rode this down for a few days. And again, this is from August 16th through the 23rd. So you held it for a few days, a weekend was nestled in there. So you held a few, you held it for a little bit. And again, when our signals and our lines cross, it's telling us to get in. So imagine we made money on the way down. We're now exiting, right? We're exiting, we're locking in our short gain. But now imagine we're going to get in right here. Okay. Imagine we get in there. So does someone want to tell me, based on a $3,000 spend again, the closing price of $55.19, how many shares do we buy? Blank shares at $55.19. We're going to buy 54. Is that right? I'll take your word for it. Buy 54 shares at $55.19. Okay, so you're working your job, you get an alert, you boom, hey, I got an alert using Matt's tool. Boom, you place an order. Okay. At this point, ladies and gentlemen, 30 minutes have passed and you're wondering, am I making millions of dollars? The answer is no, you're not. It's only been 30 minutes. Give me a break. Okay, so boom, look at this. Now, how many of you would panic and sell? You're like, oh my gosh, this guy, Matt, what an idiot. He's teaching us a bunch of garbage. Be honest, I know there's some of you out there. I know. But what if a couple candles later, we're now chopping around. We're now just barely profitable. Boom. I like the look of that candle. Now, at this point, ladies and gentlemen, at this point in the trade, how long have we been in the trade? How many candles? So we got on this candle, 1, 2, 3, 4, 5, 6, 7 candles, right? 7 candles times 30 minutes. We've only been in a few hours, only been in 3.5 hours, right? And we're already profitable and we're working our full-time job and we got this side hustle of trading going on. Boom, boom. As long as our green line is above the red line. What do you guys think? You liking the look of this? How many of you guys would jump and take, come on, be honest. How many of you guys would lock in a gain right there? A couple pretty strong sets of candles in a row. I'm not going to fault you. I'm not going to fault you. But if you jump out and it continues without you, you cannot jump back in unless you get another signal. Okay. So you absolutely, it's up to you if you want to take lock-in gains early. Boom. Now you're like, oh, good thing I exited early. But what's going to happen? Oh, no. Now you're like, dang it, now I'm going to jump back in. But no, you're not, because you took Matt's class and Matt said not to. Simon says don't do that. All right, so now here we are. Boom, you'll see our lines are kind of getting a little bit closer together. This represents an all-time high in our P&L. At this point, ladies and gentlemen, let's take a quick pause, a quick calculation. At this point, we're at 58.56. So at this point, 58.56, how much have we made? 58.56. We got in at 55.19. So not life-changing money, not on $3,000. Times 54 shares, 182 bucks. Yep, roughly rounding $182. Not life-changing money, but hey, not bad while you're still doing your other hustle. Now, over time, ladies and gentlemen, what you can do is slowly add money to your account. Maybe every month you're going to add another couple $100. Over time, that's going to grow, it's going to compound, and then you're not spending $3,000. At some point, you'll be spending $30,000, $50,000, $100,000 or more. It doesn't happen right away, but it does happen over time. Boom, boom, boom. You'll see our moving averages are about to cross if we don't get another push higher. And boom, there we go. We exit. Now, am I going to fault any of you guys for exiting early? The answer is no. So in this case, we actually made a small win, not huge, small win. So we exit, we take our winnings. Now, what happens if we're playing the long side and the stock just poops its pants and goes to zero? Well, at that point, we're in cash already, or we got the signal to exit, right? That's exactly how that works. So let's go back. Yep, one sec. Let me cancel this. Boom. So how to go back in time for back testing. So what you're going to do is you're going to open up your trading view and you're going to click on this icon right here. It looks like a double rewind. Those of you old enough to know what a VCR is, it looks like a rewind button, basically. Okay. You can click on this button and it will give you, you'll see a blue line. And so I'm able to scroll back any point in time wherever I want. And I'm going to take a blue line and drop it wherever I want. So let's say I want to drop it right there. Boom, dropped it right there. And that's how you do it. One other thing you can do is you can click this little calendar button down here. And you can specify where you want to go, how far back. Now, most trading view, you can't go back to like 1982. Obviously, big commerce hasn't been on the market for maybe just about a year. I think it was May last year. So you can't go back. You can only go back as far as the data that that TradingView has, number one. And then obviously there's no data prior to its IPO, right? So, yep, that's how it's done. And then you get this cool toolbar right here that pops up. You guys can see that toolbar. And that toolbar allows us to take a single candle, like one at a time. So there's two buttons that I want to point out. This will play it out. This is your play button if you want to play out a whole bunch of candles. And then this is a, what we'll say is a single candle. Okay, so you'll see us many times using a single candle. So the way it works is if I wanted to, let's go here. If I wanted to maybe slow the speed down a little bit and hit the play button, you'll see it plays it out just like a movie, kind of a series of candles, one after the other, okay? That's what the play button does. This button here will basically just give me a single candle. I can do what I want, take my time, get a cup of coffee, do whatever, hit the next button, and it gives me a single candle, one at a time. Obviously, if I hit them back to back, it starts giving us multiple candles. But again, this is our strategy is to buy at the close of this candle, buy at the close, and we're going to ride this out. Okay, so let me finish out this trade real quick. It looks like, look at this, ladies and gentlemen, our moving averages are about to cross. If we don't get another couple strong pushes higher, it's going to end. It'll exit and tell us to exit. Oh, the suspense. Oh my goodness. What's going to happen? Oh, we're going to go higher is what we're going to do. Some of you, it scared you and you locked in gains right here. And you could have got some, you left some money on the table. However, of course, you don't know what's going to happen right after you exit, right? So yeah, that's how that works. And then boom, boom, boom. Are we going to go higher? Are we going to go lower? If it doesn't make some strong pushes higher, there we go. Sell at the candle. So obviously, if you exit down here, you could have got a little bit more. Obviously, all-time highs being up here on that exact trade when it comes to the P&L, right? Makes sense. Okay. So somebody asked about the stop loss. I want to show you how that works. Because there is no real stop loss per se, you don't hold it till you get in. But in this case, in this example right here, it has risk management built in, but it is not the R system. It doesn't use the normal risk unit system that real life trading teaches. This is slightly different because what you're doing is you're buying, you're spending a certain amount. Right here, you're entering, oops, I even drew that wrong. You're entering at the close of this candle, which would be here, and then you're exiting down here. So it does, you're not holding it till zero. It does have risk management because it tells you to get in or get out. You're not holding it, it's not pooping its pants going to zero, and you're just riding it all the way down like a roller coaster. You're not doing it. You're not having to do that, right? Okay. Let's see. And there was one more question that I got. Let me see if I can grab it real quick. Boom. Some of you asked about trading automation. Now we have a couple strategies built into this. If you're interested on this, this is reallifetrading.com. If you scroll down, trading automation is right here. You can click more info and it'll show you some strategies that we have built into it. You can create a free account and you're able to paper trade it and watch the strategy over time. It has several strategies. It does have a 30-minute memo, which is what we've been talking about tonight. It has a variation of it also, which is a 78-minute chart on a different set of stocks. You're able to do that. Yep. Cool. So someone here, administrator, is saying your reward is making your first $100. You treat yourself to a nice t-shirt. Yeah, some RLT merch. I love it. Yep, perfect. And also, if that's all I have for you guys, if you are interested and maybe this strategy isn't your thing, which is fine, I do want to show you guys that there are some other strategies that you're able to grab. There are swing trading strategies here on your dashboard. Everyone here in class who joined this session, this training session, you do have a dashboard and you are able to add this swing trade strategy guide. If it's not here on this part of the screen, it's going to be listed down below. It's already added to my dashboard, so it's here, but if you're able to scroll down and go lower on the screen, it's going to be listed probably under your free resources over here. Okay. How can you watch this? Great question. It's recording. So after this class is over, you'll be able to go back onto your dashboard where this class was to begin with. Right here, place your first trade, and we will put the recording right there. So you can click the same button that you joined this, and you can watch the recording. Easy enough, right? Easy peasy. Yep. Great question. Okay, what other questions you guys have for me? Hit me. Let's see. Also, in case anyone wants to reach out to me, my email is Matt, M-A-T-T, reallifetrading.com. If buying puts closest to in the money, would the $3,000 rule still apply? Van. So as you know, option trading is a different risk profile than buying shares because time decay can work against you if you're long call options, you're doing directional options. So what I like to do, if you want to use the $3,000 spend, you can still do that. Obviously, in that case, if you're buying really short dated options, maybe weeklies, you are risking probably the whole 3,000. If you want, like what I like to do is I like to use 30 to 60 days to expiration and then usually buy one strike out of the money. So buy slightly out of the money, one strike, and then let it run. Obviously, you have the buy and sell alerts to tell you when to get in, when to get out. But I've made some serious coinage with options on this as well. That's not really recommended for beginners. You just need to understand the strategy itself to start with. But yep. Great. Thanks, Dan. I love that you guys are getting some value out of it. What other questions do you guys have? Michael, you're welcome, sir. Yeah, absolutely. Create a free account for the bot if you're interested in using this same strategy, but instead of getting an alert, it actually injects orders into your actual brokerage account. Yeah, my pleasure. Any other questions, ladies and gentlemen? Jenny, my pleasure. Thank you. All righty, ladies and gentlemen, thank you so much for hanging out with us this evening. We hope that you were able to get tons of value out of our free class. And again, our mission at Real Life Trading is to enrich lives. Thank you, guys. Don't forget to love life, live life, and trade it. Thank you, and good night.